Hello, everyone. It's Michael Jaco with Unleashing Intuition Secrets. Dr. Kirk Elliott back with us once again. And, the markets have been in turmoil. Stock market seems to be liking what Trump's doing, and the dollar seems to be going up for some reason, and silver and precious metals are like back and forth, back and forth, back and forth. What are your thoughts?
I mean, it is back and forth and a lot of volatility right now. And like we've talked about for months, literally, when this conflict in Iran was over, the strait would open up, supply chains would open up, gold and silver should grow robustly, right? In the end, that is still the case.
Mm-hmm.
I mean, it's still the case because that uncertainty and this turbulence about what are they going to do with rates and inflation and everything is going to come back to normalcy. And so, but what we had this week was something really interesting where Warsh, head of the Federal Reserve, comes out and has his first statement. And it was really a hawkish statement in the sense of, I don't even know if in the end Trump expected it. That, we're going to, ultimately the story was, well, we're going to lower interest rates, increase the domestic economy, literally get things to grow. But we couldn't do that while there was this conflict in Iran. So now the conflict in Iran, earlier today, they, signed this statement of understanding, this memorandum of understanding that we are going to end this thing, open up the strait, oil comes down, but yet Warsh still said, we're going to have probably a couple rate increases. Not right now, but probably in 2027, they're going to come. So the market builds all of this in. This is why you didn't see the pop in gold and silver right away, right? Because and I have to ask myself the question, it's like, okay, who is Warsh and what's the goal here, right? Because if oil's coming down, that was the main precursor to inflation, yet they still want to raise rates. Well, you and I know that there was still going to be inflation because once the strait opens up, doesn't mean that foodflation is going to end anytime soon. There was no fertilizer for an entire growing season. I mean, there's going to be some issues, but this is what the market is reacting to right now. And I want to encourage everybody, this isn't the end all be all, right? This is just kind of a next step in the volatility of the markets, right? Because in the end, it always boils down to supply and demand. Right, always. And you're going to see as these inflationary pressures ultimately subside from oil, but oil isn't the only commodity on earth, right? So silver is a commodity. Copper is a commodity. Their food is a commodity. They're going to go up in prices. So I think Warsh is ultimately going to raise interest rates. And so here's this dilemma that we're seeing is normally when interest rates are up, steady high, or the propensity to raise, gold and silver don't do very well, right? But what's the other side of it? Well, inflation causes gold and silver to do well. So does supply and demand. If there's low supply and high demand, they will do well. So this is where you have to start to weigh out, what's going to be more important moving forward? Is it the interest rate story or is it the real story of supply and demand on commodities that are needed? So why is gold needed, right? Let's start with that one.
Okay.
Technically, it's not. I mean, it's not a manufacturing industrial metal, but it's a flight for quality. It's what central banks are allocating into as we've got this paradigm shifting moment where we're moving away from tangible assets, away from, paper assets as we know it to tangible assets. I mean, this is just happening globally. The debt spiral is spinning out of control globally. Countries are going to continue to debase their currencies because that's what they do. That's what inflation is. And ultimately, gold and silver will actually grow robustly. You look at what's happening with, let's just look at SpaceX, for example. Biggest IPO in history, right? Elon Musk, the world's first trillionaire.
Yeah.
So what are people doing? They're pulling out of things like crypto all crypto is like absolutely getting crushed right now. But is it because people don't believe in technology and AI and what's going on in crypto? It's like, no, but they're going into this immediate pop of AI shares. AI is going to rule the world. And a lot of people are pulling out of crypto, going into AI. So you're seeing this irrational exuberance and a kind of a changing of assets temporarily, right? But ultimately, fundamentals always hold true. Even Michael Oliver, right? He's been, big, massive gold and silver forecaster, commodities analyst for decades. I mean, he's a really smart guy. So he's not going to do any ex post until Christmas. He's done for a while. Why? Because he doesn't want to. Maybe he doesn't want to be wrong. Maybe he doesn't want to put his neck out there, right? I don't know, but he did say, still, we're going to hit all-time highs, not necessarily in June or this summer like he thought, but by the end of the year. Why is that? Because of Kevin Warsh's statements, right? And this interest rate cycle is still the predominant story that's being talked about on financial news networks. Here's where I want to say I don't really care. I don't really care necessarily about the interest rate story because ultimately supply and demand cover everything. So when you see this pullback that we're seeing in, it's not even a pullback. It already pulled back. It's just like going sideways, right? Where silver's hovering around $65 an ounce, gold in the 4,100 range. I mean, so Goldman Sachs this morning said, we're actually changing our forecast a smidge by the end of the year. We don't think gold is going to hit 5,400 or 5,600. We believe it's going to hit 4,900. Does that say that they think the metals markets are over? No, they still think it's going to go from 4,100 to 4,900 on gold. Why? Because the world is going to start screaming for tangible assets. It's just delayed a little bit, right? So here's where, how do we look at that? How do we look at this moving forward? It's like, okay, if the fundamentals didn't change, you look at it as a buying opportunity, right? With silver at $65 an ounce, with gold at 4,150, and even Goldman thinks gold is going to hit 4,900 by the end of the year. It's an $800 increase. That's not chump change, right? It's halfway through the year. And that's like a 20% gain in the price of gold by the end of the year, even with a reduced forecast. What is projected for the stock market? Not that, but in fact, the opposite. Stock market's overvalued. Revenues aren't there. This is irrational exuberance. It's a thin bull market being consumed and directed by AI shares, not the economy as a whole. Right. And so you look at this and you think, okay, well, our goal as wise and prudent investors is to buy low and sell high. Well, the stock market is actually not poised for massive growth moving forward, especially when Kevin Warsh says, we're going to raise interest rates moving forward. Well, when there's already not a real story behind the growth in the stock market, it's just a thin bull market with AI shares, that's ripe for a correction. Right? So we have to start weighing here the outcomes of our actions. It's like, all right, if the stock market is up in a very thin bull market and it looks like it's ready to pop, well, what would be safer? I'll take a 3-4 month delay in the price of gold and silver any day of the week, compared to investing in something that's at irrational highs that people are going into just because of AI shares, right? So you look at this and you think, okay, what has Kirk and Michael been saying for a long time? When this conflict is over, gold and silver should go up. Well, the conflict appears to be about over, right? We still don't know what's going to happen with Hezbollah and Israel and Iran's involvement with them. But when it comes to the U.S. and Iran involvement, this basically memorandum of understanding that they're going to open the strait, that they're possibly going to reduce targeted tariffs, that should actually stabilize things in the Middle East, unless there's some other crazy outcome. And then you look at what else is happening, everyone's, excited. And it's a great, huge effort that's been made to kind of put an end to this conflict in Israel. But now Ukraine and Russia are going at it again. And it's like, oh my word, is this stuff ever going to end? Right. So you look at this, and ultimately geopolitical conflict globally, not talking about just in the Middle East with oil. That's a completely different story, because oil is used in everything. And those inflationary pressures caused financial media to talk about interest rates. Right. So, but get rid of the noise. This is what I want to encourage everybody. Get rid of the noise that surrounds the news cycle and your decisions, and always go back to supply and demand, right? Like, for example, let's say you're a bicycle rider and you really want a bike, and you go to the bicycle shop and there's only one left. If there's only one left, you're going to almost pay any price possible if you're like this amazing biker, right? So, but this is supply and demand. There is too little supply of silver to fund the AI growth and the cryptocurrency growth and the electronics and everything in the world. I know I sound like a broken record because I've been talking about this for months, but to me, this is very important. Don't let the noise fool you into thinking that this bull market is over. Use it as an opportunity to buy in on a dip, because fundamentally nothing has changed.
Yeah, definitely. The markets will price in the future. So you're seeing, basically all the different dips and so forth. Something comes in, the market prices it in, and then they recover, and then they start to move again. Now, Michael Oliver, his predictions are 300 to 500 at the end of the year. I agree. We're probably going to see that. So that's a lot higher than where we're at right now, which is 65. And so we've been saying buy the dips. Could it go to 50? Possibly. But it could also go to 500. So you never know which way it's going to go. So yeah, but anytime it's pulling back, that's when I'm in there buying dips. So you have to buy dips. If you don't, then you're going to miss out on a super bull market that's coming for precious metals. And we're just beginning, like we've said, in the third year of it now, and probably usually these things last for about 8 to 10 years. So we're in the beginning stages of this bull market.
I mean, absolutely. Commodity cycles are not short duration. They're literally over a decade. You're absolutely right. And we've been in it for a few years. Mm-hmm. That's it. We're probably still 60 to 70% of this bull market left. And let's just say for 1 second, I mean, he's not, but let's just say, okay, Michael Oliver's a dunce forecaster, and he's 50% wrong. Even on his low end projection of 300, even if he's 50% wrong, that still puts it at 150. Right. We're at 65. But here's the thing, Michael Oliver isn't stupid. He understands the markets. Goldman Sachs is not stupid. They understand the markets. They still think gold is going to go up $800 this year alone, even after their reassessment of, where it's not going to be 5,600, it's only going to be 4,900. I don't care. Show me any other asset class where there's half a year left in the growth and they still think it's going to go up 20%. I'd take 40%. This isn't me forecasting this. This is Goldman Sachs, right? I'd take, a 40% growth in a year, which is what that number represents. It's 20%. There's 6 months left. I'll take that any day of the week for a decade. Imagine what your portfolio would do. See, when you look at the growth of any asset, you look at, okay, it's not just the growth that you're concerned about. What is the opportunity cost? What are you missing by going into this? See, this is the one spark, right, that has caused not massive amounts of money to flow into gold and silver over the last 3 or 4 months. And that spark is the stock market hasn't corrected, right? There's no urgency to get out of your stocks when the S&P 500 hit all-time highs, even though silver and gold have been growing too. It's like, why reassess our position? Why move? Well, once the stock market starts to hit the skids, you're going to see across the board, money changing hands, asset allocation changing into tangible assets that are real. So if you look at Asia, Michael, what is gold inflows into Asian ETFs, into gold ETFs? It's like literally through the roof. What do they see that we don't? They see monetary instability globally. They see a paradigm shifting moment that's still happening. It's not like they're liquidating all of their gold. No, they're adding to it.
Oh, yeah.
Right? They're adding to it in big, huge waves. So when we look at these kind of fundamental forces that are driving the growth in any market, follow them, right? That you don't have to be a central banker or a hedge fund and be putting millions and tens of millions and hundreds of millions of dollars to actually grow. You can do it 1 ounce at a time as individuals. Just do the same thing at whatever level that you can, because in time, my forecast and the things that we've talked about, I haven't changed, because supply and demand always comes through. This conflict is over. Gold and silver should go up. Ultimately, the story of these interest rates and what's Kevin Warsh going to do, that news is going to go away. News cycles are very short, and people are going to start looking at supply and demand. Take advantage of this situation and really protect and preserve and grow and thrive during these times of uncertainty.
Yes, most definitely. And I'm looking at the the 1 year mark in the NASDAQ and silver. If you go back, and silver's obviously come back from its high. If you looked at the 3 years ago when silver was hitting $17-18, and we were jumping up and down saying you got to buy it, you got to buy it. It went up almost 8 times. That's not 20%. That's 100%, 8 times over.
Yeah.
So that's insane returns this year. Over the last year, even with a pullback, because it went to 120 plus, and then it's come down. If you just take in the last year, the NASDAQ is up 36% over the last year, and silver, even with a pullback, is up 81%. So these are returns that are unheard of, and these returns are going to continue and probably continue on a level that is going to be staggering. We'll probably see, we can't guarantee, but we probably will see, this doubling and tripling and quadrupling going forward. There's some experts that are saying, $1,000 at the end of this cycle, just for silver. Of course, gold, 20,000. So we've talked about dollar cost averaging in. You keep adding to your pot of money. At some point, you take a little bit out, turn it over to gold at some point, and I think, or continue. If you're young, I'm telling my daughter, she's young, and it's like, just keep adding to it. The market pulls back, it's okay. You're in it for a long term. You're going to do well with it, and it's going to put you in a position where you'll be able to go into stock market again and do really well, because it will pull back substantially. I think up to 80% or more in the stock market. So is silver going to pull back? Silver and gold always go up during stock market pullbacks on a massive scale. So yeah, it's an incredible time to be investing in silver.
They do. Did I can't remember, Michael, on the last show, it was a couple of weeks ago that we did together. Did we talk about what happens when Middle East crisis ends to gold and silver? I can't remember if we talked about that trend.
I don't think we did.
Okay. So if you look back, it's always this, being on air all the time like you are, you should never use the words never or always, right? It's like, okay, it's always somewhere in between.
Yep.
Well, when you look back at, I'm just talking about Middle Eastern crisis, not crisis all over the world in different countries. When you're talking about Middle East, there's one thing that's always comes to the forefront, and that's the price of oil. Well, because oil is used in everything, and so that's the most inflationary commodity on earth, and then interest rate cycle stories come into play. So during the time of Middle East crisis, during the beginning of those, precious metals come down. They do at the beginning of these crises. But by the time when the crisis is over, what happens to gold and silver? Well, let's look back. You had the basically oil embargo crisis in the early 70s. You had the Iran, the crisis in 1979 in the Middle East. You had 9/11, at the beginning of the century, right? And then, so you look at all of these Middle Eastern crises. What happens to the price of metals when it's over? They hit an all-time high. They hit an all-time high. So not just higher than it was before it started, but literally an all-time high. So what was the all-time high on silver? January 30th, it was like $120 an ounce. So this crisis is over. Where do we expect silver to go from here? An all-time high. Where do we expect gold to go from here? An all-time high. Now, how often does this happen? In Middle Eastern crisis, literally all the time. All the time. It's one of those times where it's like, okay, you say never and always, don't ever use that. But when you look at these crises throughout history, modern day history, when oil is actually used for like everything in manufacturing and transportation and plastics and, you name it. I expect gold and silver to hit an all-time high because historically that's what happens. The last Middle Eastern crisis that we had, what did gold do the rest of the following 12 months after the crisis was over? It went up 90%. 90, right? So you look at that and it's like, okay, our goal as wise and prudent investors is to simply buy low and sell high. The crisis is over. History should repeat itself. Literally take advantage of these price dips, especially what you talked about earlier. When you look at charts and we hit the 200-day moving average, we hit the 50-week moving average, the prices hit that. Where do they go? It's a good testing moment. If they go, so here's from a technical standpoint, if the 200-day moving average is moving up, which means it's the average price of the metals, whatever metal you're watching, over the last 200 days. If it's moving up, it means there's a bull market happening, right? Because the price keeps trending higher. If you hit the 200-day moving average while the trend is moving higher, it should bounce off of that and move up greatly. If the trend is coming down on the 200-day moving average and you dip below it, it's like lights out, look out below. It should probably keep going down. We don't have a declining 200-day moving average. We have an increasing one. Gold and silver were way overbought, came down, hit that moving average. Therefore, and since the bull market is still intact, you should go up from here. So I don't care if you're looking at the price of metals from a technical standpoint or a fundamental standpoint. The fundamentals always make a chart look like a chart, but on a chart, we hit the 200-day moving average in an uptrend in a bull market. It's the best time to buy ever, like literally ever.
Yeah, definitely. Yeah, so this pullback, you'll sometimes get below the 50-day, and that's just a head fake for the bears. You want to get rid of the shorts, get rid of the bears and so forth, or get rid of the longs, the weak longs. That those tourists that are out there in the gold and silver market, and once they're gone, then it's time to get serious, and we're at that stage right now. So we'll see, how this goes back and forth. You keep hearing these reports. Iran is saying, yeah, we're not negotiating anymore. Hezbollah, which is basically a puppet of Iran, is still attacking Israel. Israel's fighting back, as we would if anyone attacked us. And then you hear the narrative that, oh, look how bad Israel is because they're attacking Hezbollah. No, they're being attacked by Hezbollah and they're attacking back. So this is part of Iran's, little game they play. I played against these guys for over 35 years. When I was a SEAL in the CIA, this is the game they play, and you have to learn the way they play, and you have to beat them at their own game. And I think President Trump's doing a fantastic job, and we'll see how it goes going forward. But in the meantime, we're in the early stages. We still have 7 years in this bull market, guys, at least. So it's not too late, of course, to get involved in the precious metals. And of course, the best way that you can get involved in this is with Dr. Kirk Elliott, and he's done a lot of us really good. So many of us that are watching this, we're we're steady, we're focused. Some of you that are still, because I see in the chat, you guys are still like, wondering if you should get into gold and silver. Silver should be the one you're getting into at this point. It's the time to get into silver right now because it's going to go up. And this is the best place to go for that, kepm.com. And you go to the site and you hit the contact. And there's phone numbers here, 720-605-3900, or you can fill out a form and send it in. So it's multiple ways. So you can go on the site and look around. I love to go in here and look around and see what the latest information is. Click on the links and it gives you charts on it. Here's that all-time high up here. And we're just kind of like just floating around here waiting to hit a new all-time high, guys. So it is coming. You want to be involved in this. This is not something that you just watch from a distance. You need to get involved. This is a multi-generational opportunity to create wealth that can, help you in many different ways.
100%. I couldn't have said any better myself. So just give us a call, 720-605-3900. If you have any questions, say Jaco sent you, or you can go to the website that we put together for Michael, kepm.com/Jaco. Just reach out to us. We'll answer your questions. And if it makes sense to you, we'll get you allocated into safe ground at literally an amazing time to get in on this pullback.
Absolutely. All right, Dr. Kirk Elliott, thanks so much. We always appreciate your insights and your wisdom. So look forward to we're all benefiting. I'm benefiting massively from this. I never had, I was a little boy, I was like, someday I'm going to be rich. And I'm like, wow, I never imagined it would be on this level, and it's just beginning. So thank you so much for, your insights, investment opportunity, and so forth.
Oh, you bet. It's my pleasure.